Do you actually understand your payslip? After talking to a couple of my friends, I was surprised that most of them didn't really understand how to get from their gross pay down to how much they actually receive, their net pay, and understand how all of the different taxes work in Ireland. So in today's video, I'm going to take you through an example and show you how all of the different tax heads actually work, your PAYE, your USC, and your PRSI. This may be also useful for anybody who has moved to Ireland for the first time. But even if you are from here already, it is very important to understand these things so you can recognize if you're being completely overcharged tax. There may be a few tax credits that you are leaving on the table and not claiming through your payroll. For example, by increasing your pension contributions, you will be able to reduce your PAYE. So let's go through an example now and it will all make a lot more sense. So this is what a normal payslip is going to look like. You will have your gross pay and your overtime on the left hand side here, and then you will have the three different taxes that you will pay: your PAYE, your universal social charge, and your employee PRSI, and they will be calculated here, and this is then deducted to come back to your net pay. Also down in the bottom section here, it will show you a cumulative amount that you have earned throughout the year and how much tax you have also paid this year so far. And then there will be another section keeping track of all of the different tax credits that you are entitled to and how much you have actually used, as well as your cutoff point for this PAYE tax, which I will show you in the next few slides. So that's just an overview. We'll just go through an actual example now. So for my example here, I'm just going to go with a single person that makes 45,000 per year, and they make a 5% pension contribution. And for this example, I'm just going to use the 2022 tax rates. So the first tax that we need to calculate is your PAYE. Your PAYE is calculated on your gross pay less your pension contributions. This person, as I said, earns 45,000 in a year, so I'm just dividing that by 12 then to get their monthly pay. So they've decided to contribute 5% of this to their pension, which works out as 2,250 per year and 188 per month. So I have deducted this then from my gross pay to come to the amount that I'm going to use to calculate my PAYE. So there are two different rates of tax for PAYE. The lower band is at 20% and the higher band then is at 40%. For a single person, they will start paying the higher band when they go over 36,800. So everything below 36,800 is at 20% and everything above that is at 40%. So for this person, they pay 7,360 at the lower rate, so that is 20% by your 36,800, and you can divide that by 12 to get the monthly amount. And because their pay is actually above this 36,800, they need to pay 40% on the balance. So the balance above this 36,800 is 5,950. So that is the 42,750 that I have here, less the 36,800. And then I multiply that by 40%, and that gives you 2,380 per year. However, at this point, then you are allowed to deduct any tax credits that you have. So for starters, a single person gets a tax credit in 2022 of 1,700, and also if they're an employee, they get another tax credit of another 1,700. So what you can do then is deduct these two amounts from your tax to come to the total amount that you actually have to pay. So it worked out that 6,340 PAYE that they paid in the year, and 528 per month. This is after taking away these tax credits. So it is very important that you are making sure that you are maximizing the tax credits that you can get here. Some other ones you may be entitled to are for a carer's allowance and for private health insurance, for example. Obviously, the more tax credits you build up here, the lower the amount of PAYE you are going to pay. And also, you can control the amount of PAYE that you can pay by your pension contribution. As you probably noticed here at the start, I actually deducted off my pension contribution before I started charging tax on it. So the more I contribute to my pension, the less of the gross pay I need to pay PAYE on. So for example, if I increase this pension contribution to 3,000 for the year, then you would not pay any PAYE on that extra 750 that you had earned. So the total amount of pension contributions that you can get tax relief on will depend on your age. If you are under 30, you can contribute up to 15% of your gross salary and get a tax relief on that amount. But if you go higher than that, you won't get any tax relief on any additional contributions. Then if you're between 30 and 39, this increases to 20% of your gross salary. And it keeps on increasing through the different age ranges. So if you are trying to build up a good pension, try and stick to these limits to make it as tax efficient as possible. So that is our PAYE calculation done for our single person. But if you are married or in a civil partnership, then it is slightly different. You will have different thresholds. So the lower threshold is higher for a married person than it is for a single person. And if you are married and both people are working, then the first spouse can earn up to 45,800 at 20%. And the second spouse can earn up to 27,800 at 20%. So this is basically just twice the 36,800 that a single person can get. Our next tax that we need to calculate here is our universal social charge. So this is actually charged on your gross pay. You don't deduct any of your pension contributions for this tax working. So for the first €12,012, you're going to have to pay 0.5%, which works out as €60 per year or €5 per month. Anything between €12,012 and €21,295, you need to pay 2%. So that works out as €186 or €15 a month. And then between €21,295 and 70k, you're going to pay 4.5%. So this is €1,067 per year or 89 per month. And for my example, the person was only earning 45,000, so that stops in this band here. But if that person was earning above €70,044 in a year, then you would need to pay 8% on anything above that. So the total USC for the person earning 45,000 in the year comes to €1,312. So the next tax that we need to have a look at here is employee PRSI. This one is very easy to calculate if you are earning more than €424 per week. It is simply 4% of your gross pay, so that works out as $1,800 a year or $150 a month. But some important things to note here is if you are getting paid less than €325 per week, then you won't pay this tax at all. And the second thing to note here is if you are earning between €325, they should say, and €424 per week, then you may be entitled to a PRSI credit of up to €12 per week, depending on how much you earn. So there are two types of pay-related social insurance taxes. There's an employee one and an employer tax, which we just calculated a few seconds ago actually gets deducted from your gross pay. But the employer one does not get deducted from your gross pay. This is the responsibility of your employer to pay it on your behalf. So you will see this tax on your payslip, but just note that it's not coming off your gross pay to come to your net pay. Your employer is going to pay this tax for you over to the taxman. So the tax rate on this for a person earning 45,000 a year is 11.05%. So your employer is going to pay €4,973 in a year. If you earn less than €398 per week, then your employer only has to pay 8.8% if you are a Class A employee. So that is one other important thing that I should really mention, is there is different types of classes of employee. It goes all the way from A to J, and you will be able to see what class you are on your payslip. Say for example, this person on this payslip is Class A1. And just to note, if you're anything other than Class A, then you will have slightly different PRSI rates. And as I said, this won't affect the majority of people, but if you see any other class than A on your payslip, then just note that you need to look up and see what the different rates are. So now we have come to our net pay calculation. We've calculated how much we are putting into our pension, and we have calculated all of our three main taxes that we have to pay. So it is simply just taking your gross pay and then deducting how much you're putting into your pension and the three taxes to come back to your net pay and how much you will actually receive into your bank account. So for a single person earning 45,000 a year and contributing 5% to their pension, they will get a net pay of €2,775 per month. So that is pretty much it for my example and my video. I hope I was able to explain it some way okay. If anybody has any questions, please make sure to leave them in the comment section and I will try and get back to you. And if you are new around here, I would really appreciate it if you subscribe to the channel and drop a like on the video to help with the YouTube algorithm.